there's a bit of a disconnect when it comes to protection portfolios.
It doesn't matter how much money you make.
Tell me about it.
If your family cannot access it.
Pass down wealth, but also pass down values. At 80, I want to be work optional.
Yes.
Like I want to work because I want to, not work because I need to.
We have to have a growth portfolio, which is our investments, and a protection portfolio, which is a combination of our insurance and some legal structures to just make sure that there is continuity.
Hi everyone, Happy New Year. Welcome back to another episode of Finance Friday. I'm very happy to have you guys join me in 2026. We took a bit of a short break from December to now, obviously to just rest and reset. And I am so excited to be resuming the Finance Friday episodes. Let me know in the comment section how you guys have been and what your word for the year 2026 is. I'm very excited to see what you guys are aspiring to do and to achieve in this new year. Our shooting partner is Sarova Hotels, and we are shooting at Sarova Pan-Afric Hotel, one of their Nairobi hotels. Did you know that Sarova Hotels has been in business for the past 50 years? They have grown to 9 hotels in all the major cities in the park. Sarova Pan-Afric and Sarova Stanley in Nairobi, Woodlands in Nakuru, and even Sarova Imperial in Kisumu. They also have a safari experiences in Sarova Mara, Sarova Lion Hill, and Sarova Shaba in Samburu. If you're not into safaris but you like the beach, there is also Sarova White Sands in Mombasa. Next time you want to take a vacation, please book with your favorite Sarova hotel at your preferred location. So today we are going to be having a very interesting conversation that is tailor-made to our Africans and Kenyans living in the diaspora, but also the information that we are going to be discussing is very relevant to also Kenyans that are living locally. I decided to do this episode because sometime last year, we did an episode on some financial mistakes that we thought Kenyans and Africans in the diaspora were making, and you guys loved that video. We got so many questions. We coached so many diaspora Kenyans between the last quarter of the year. And one of the gaps that I noticed is that there's a bit of a disconnect when it comes to protection portfolios. We've been trying to address the investment gaps in terms of people losing money trying to invest back home. So we are really working hard on the financial literacy aspect of it and just making sure that, we are giving you opportunities that you're in control of. But when it comes to protection, so we are talking things like doing a budget and realizing that it's constantly being interrupted by calls from back home to sort out a medical bill or to attend to a funeral, or the protection aspect of it is where I noticed there's still a big gap. And because I'm not a protection expert, I decided that I'm going to bring the best in the game in the entire Africa so that she can take us through some of the gaps that she sees when it comes to building a protection portfolio for Africans and Kenyans living in the diaspora. So Mnyindo Tairo, I'm very happy to have you here.
Thank you, Susan. It's a pleasure being back.
As
always. I told you should put me on a retainer.
Or ata ununue shares.
And lazima. Legacy Hub, here we come.
So maybe let's start with a bit of introduction, just for anyone who maybe has never interacted with you or knows the work that you do. Tell us what Lerisk Africa does and why specifically protection.
Thank you so much for that, Susan. My name is Mnyindo Tairo, and I'm the founder of Lerisk Africa, where we focus on the protection and preservation of African family wealth. The one thing we have observed is a lot of Africans, Kenyans are building wealth faster than creating the systems to actually protect and keep that wealth. Making money is one thing. Maintaining and keeping it and minimizing interruptions in your life is a whole other different ballgame. So what we do, we come in to help you build the structures, plan your liquidity to just make sure that there's minimal to zero interruption in your wealth creation journey and and with your families as well. Yes.
You're always so passionate when you're talking about protection. So why specifically, why did you decide to go into this line? Because, we are both finance people. I mean, I'm very heavily focused on like the personal finance aspect, budgeting, investing, and I'm super passionate about it. So for you, why do you feel so strongly? Why do you spend Monday to Monday? This girl is working even on Sunday night. Why protection of African families?
I have gone through a major interruption, Susan, in my life. I was married with young children, and then unfortunately my husband died unexpectedly. We were young, we were healthy, and then COVID came and he passed away. And it created such a huge gap that I had not noticed before when we were still married. So when I saw that, I realized a lot of Africans are facing the exact same problem. This thing is not in isolation. We're not doing it by ourselves, right? So what I decided is now to focus on the protection and preservation of wealth journey, because it doesn't matter how much money you make if your family cannot access it, or it does not come through for you when you need it, or all the wealth that you have created to go down with only one illness. So our job is just to make sure that that is maintained. This is why I'm so passionate about it. I have seen also from a lot of families who have lost everything just because of lack of creating of structures. I keep on telling people, just think about it. You're building a house, state-of-the-art house, and will you feel comfortable building it without even putting fence or even a guard to just make sure that everything is okay? Because think about it, if you do not put any protection around the house that you're building, someone will come and build and steal a brick.
For sure.
Wale watu wanajenga, the people who are building, how it can be. Someone comes and steals, or an animal comes in, and a wild animal, because of the lack of protection, it means it slows down your journey of building that house. So the same thing when it comes to building of wealth. The moment we have constant interruptions, it means we will not get to where it is that we want. So what we're trying to do is just to make sure that we minimize that.
I think one of the most powerful things you did for me when I first met you is to make me understand the place of a protection portfolio. My mind was so focused on budget well. In fact, make this money, budget well, and invest like Warren Buffett, like become the next, whatever, top 40 under $40 millionaire, whatever. And then I had this first conversation with you, and for the first time, something clicked. And there's something you told me, Susan, your protection portfolio protects your investment portfolio. And I'd never thought of what exactly is a protection portfolio, So maybe for the people who are watching us, what is a protection portfolio, especially, what does that look like, especially for especially our Africans and Kenyans living in the diaspora?
That's a very good question, Susan. And what you're saying is true. We have to have a growth portfolio, which is our investments, and a protection portfolio, which is a combination of our insurance and some legal structures to just make sure that there is continuity. So when we're talking about protection portfolio, we're talking about coming up with a plan, or this is a combination of different tools to ensure that there's minimal interruption and there's continuity no matter what happens. So what exactly does the protection portfolio entail? So as I mentioned, it entails of your liquidity plan. And what is liquidity plan? That means in case, Susan, something happens today, unexpected, I need cash, and I do not want to take money from my investments, because what is it going to do? It will slow down my investment. The moment you start touching your capital, the moment you start touching your interest, it means you're slowing that down. So we have this separate portfolio to just make sure that, okay, I do understand that life can be long and things do happen. What do I have set aside to make sure that I do have instant cash in the case the unexpected happens? So what entails your protection portfolio? So first we have your emergency fund, which I know you've spoken widely about. Just in case.
Imagine they call me Ule Mama wa emergency fund. You people are not, you're not nice people.
Kwa nini wachokozi?
Ule mama wa emergency funds.
And at least umeifinyilia.
You know?
So yes, having an emergency fund to make sure, because you see at a time like this where people are losing their jobs, do you have enough money to make sure that you do not change your lifestyle for the next maybe even 6 months to 12 months and not interrupt your children's lives? Because the moment you don't have that liquidity, you're going to be in a lot of anxiety, because protection is not just about the money aspect, but it's also about our overall well-being. Because you'll have to change maybe where it is that you're living, your children's school fees, your school, and a lot of things regarding your lifestyle have have to change. That's emergency fund. Secondly, we have medical cover, because sometimes an emergency fund is not enough. If someone needs to be admitted, Susan,
tell me about it.
Where is 200,000 going to come from?
Just to get you admitted.
Just to get you admitted. This is not even the full cost of the whole admission period, because that one is unpredictable. So you have to have medical cover for unexpected medical emergencies. When people say you're only one illness away from poverty, it is true.
It's true. Most African families are one illness away from bankruptcy.
It's true.
Because like if someone in my household is unwell and we have a bill for 4-point-something million, we've liquidated everything. Yeah.
And you have to go and sell things quickly. Maybe even if you have an investment, you'll have to sell it at a loss. Liquidate it. You cannot let your person suffer, or even if it was yourself. Or you'll have to go and get a loan. Imagine a loan to now take care of this. So it's just good to have some level of predictability, and having a medical cover creates that predictability. And I say at minimum, at least have an inpatient cover. You know, Susan, if I need to go maybe for an outpatient need, if I ask you for 5,000, I mean, I know.
You know, we can,
You know, we can make a plan. But inpatient,
I could even be wanting to help you, but I can't afford it.
Exactly. Yeah. Because we're all in different seasons in life. Maybe you want to help me, but you cannot. You don't have the ability. So we have to take it upon ourselves to just ensure we have medical cover for ourselves, our kids, our families, our parents, because that interruption is going to disrupt us. And as I mentioned, it's not only financially, but mentally, emotionally, because when your person is not well or you're not well, it's going to really affect you. Yeah. And number 3, we have life cover. We are currently providers, right? Whether you are providing an income to your family, or if you're a stay-at-home parent, there's what it is that you're providing for your family, whether you're cooking, you're taking care of the kids, taking them to school. The moment a parent or a provider is not there, that means they have gone with their ability to create an income.
That's true.
So think about it.
It dies with them.
It just dies with them. Imagine right now you have a child who's 3 years old and you transition at this time. Who's going to take care of that child between the age of 3 to 25? Because the moment you're not there, even you're not providing an income. So what a life cover is essentially meant to do, before mwanze kusema sijui education endowment policy, what a life cover is meant to do is to replace your income, your economic value. Each and every one of us has an economic value. There's an amount of money we're going to make in a lifetime, right? What can we do to make sure that we protect that income? And that means that in the case we were to transition, this could be a death or get an incapacitation. That means that you get a critical illness like a cancer, stroke. There's a rise of these types of illnesses.
I've noticed.
And also now, in case you're to get an accidental disability, how are we going to be able to continue providing that income and minimize interruption in our lives, or if we're alive due to the critical illness, or if we've passed away, our family's lives. So what it does, there's a lump sum payout to ensure that level of continuity. So a life cover is so critical. You don't even have to be a parent, because there are people who are telling me that, we're child-free. We totally understand. But even as someone who's child-free, you could get a critical illness cover, and medical insurance sometimes is not enough. It does have the levels of the caps that it has for the different conditions. So in the case you have something like a cancer, it could cost easily 7 million maybe to go outside of this country, and maybe your medical insurance has been capped to 1 million,
2 million max,
2 million max. So what is going to make sure that yes, you're no longer going to work because you're not well, but you have enough money to continue paying for your house, and also extra money to continue supplementing the medical cover that you already had. So a critical illness cover through a life cover is so important, just to replace that income, right? That is life insurance. Another thing it does is to create an inheritance, a cash liquid inheritance. Africans love that. I think the reason why a lot of people are actually taking this whole life is because, to build a business, it takes a lot of work, Susan, right? And investment sometimes could go well or not. But if you want to have an assured inheritance for your kids that is stress-free, it's the easiest, and it's tax-free. I mean, you don't get taxed, and it's paid out within 14
and it doesn't go through probate.
It doesn't go through probate.
But we'll get into that.
To get there. Yeah. So that is now the life cover. Then we have trust fund accounts, because one thing it is that we noticed is parents can be coming from a very good place. getting these life covers, but what happens if your guardian receives this money and they don't know what to do with that money? Or sometimes you think you know people. Someone goes and buys themselves a Range Rover with your kids' money, or they build a home with your kids' money. Whose home will that belong to? And there's nobody to really take care of that child or to be their voice. So we had to introduce the trust fund conversation. Think about it as a protected pot of money, right? There's legal and financial protection. So when money falls into this pot, nobody can touch it except through your instructions. So when you think about a trust fund, when you're thinking about it from a protection perspective, this is also to protect your voice and what it is that you want it to do for your children. Not only children, but some people are also setting it up for their parents. So that now, in the case those life insurance proceeds are paid out, it comes into this pot and it will leave according to instructions. So the money that your guardian will touch is only upkeep money, because if you have to go to the supermarket or buy the children clothes, it will make sense for the guardian to have the cash access. Exactly. And for the people who don't do education policies, this can also be a really good way to save up for your kids' money, because this money does not go through probate. As Susan said, that means that in case you to pass away, this whole thing has to go through the courts for them to decide who gets what. Money market funds go through probate courts. Special funds, just your bonds, your stock market, anything that is an investment has to go through the courts. So having a trust fund is important. And then lastly, having a pension. The chances of living long is high at this point in time. Actually, people are living longer than usual. And think about it. You have retired at the age of 60 and God gives you a long life till 95.
That's another 35 years.
That's another 35 years.
Maybe we didn't even work for 35 years.
Exactly. So a pension plan is part of your protection portfolio because it ensures continuity even after you've retired. And when you're thinking of pension, because I know the people who say, oh, I want to retire early, that is good. Depending on how you structure your investments, you can actually retire at 45. But when you're talking about pension plan, think about that amount of money you want to know that you can access no matter what, whether your investments went well or not. This is an assured amount of money when you hit 60, because at 45, even if your investments just go kaput, you can start afresh. But when you're 65, trying to start afresh at that time is difficult. It's difficult. So we just want to make sure that there's continuity even after retirement. So that's why a pension plan is also part of your protection portfolio. So we're going to repeat: your emergency fund, medical cover, life cover, your trust funds, and your pension plan to create your protection portfolio.
I really love that. Let's get into the diaspora reality, because one of the dynamics that I see when I am coaching my lovely people in the diaspora is the assumption that as long as I'm working and earning, my protection portfolio is sending money back home. So I see a lot of people be like, but you know, my parent could just stay the whole year without ever going to a hospital. So why should I buy a health insurance? Or maybe you're thinking, why should I put aside all of these things? I'm sending money home so that I build my house. And then when I come back after all those years in Australia or in, Qatar or Dubai or wherever it is that I am, I will come to a house. So can we talk about these gaps that, because I know you also support a lot of Kenyans in the diaspora.
Yes, I do.
What are the gaps that you've seen in how their attitude and their mindsets around building a protection portfolio is? Where are some of the gaps? Because like for me, I know specifically the health issues. They are like, and especially if you have aging parents or you traveled but your children are here. So let's talk about this. Why isn't sending money home a protection plan, and why is that dangerous? Because I feel like it could be potentially dangerous.
It is, Susan. And what you said is very true, because we have gone through this with a lot also of our diaspora clients. Because think about it, the protection conversation is only now that it's catching fire, because it's something that most people never think about. Because as Africans, even if you're an African in the diaspora, it also happens that you don't want to think of what could also possibly go wrong. It's not a thing. It's almost like
you're not trying to have negative mindset.
We don't want negative energy, right? So when it comes to the gaps that you're talking about, what you're saying is true. A lot of people feel that them sending the money back home is already enough. But what they're forgetting is the moment also something does happen unexpectedly. Because think about it, maybe you have been contributing or sending about 30,000 every single month, right? Depending on what are your family's needs. Some people 30, we've even seen people sending even 50,000 shillings home. And then someone maybe gets into an accident or has to get an admission. Maybe that 30,000 you send that month cannot be enough. Maybe it was just taking care of the household, maybe the food, the clothes. But will that give someone access to a hospital? Because at that time, now what is going to happen to you? They're going to call you and say, by the way, someone
we have
needs
this.
Exactly. And you don't know at what point in your month they're going to call you. Maybe you don't even have the money at that point in time, or your money is attached to something else, and then now you get this surprise. That means that it is interrupting something, because for you to be able to send maybe 100,000 home because someone has been admitted, you have to take that money from somewhere else. As we had mentioned earlier, it's either you have to interrupt your wealth growth journey, or you have to take a loan, or now start borrowing friends, right? And now that one is also going to affect you a lot, both financially and also give you a lot of anxiety, because just sending money back home is not enough. It is always very critical to just make sure that you have created some level of predictability around that. Because the moment you have, say now, the medical cover that you set aside, okay, yes, you're contributing these funds to your parents, but if your parents was to fall sick, you cannot tell me you're just going to let them be.
And that's the thing with medical costs. You can't ignore them, because you see, a lot of the times there's I feel like there's levels to black tax. And I feel like in terms of especially the diaspora experience,
it's crazy.
you see, there are some things you can, I mean, the struggle with diaspora Kenyans is that sometimes you're so far away, you can barely ascertain what you've been told. We do not have food, for example. You're not here to confirm. So it's either like you're playing Russian roulette with it. It's like they could have food, maybe they or not, But like you see, a hospital bill, for instance, or like a sick parent, a diabetic parent, a parent who has pressure issues, like the moment it's so anxiety inducing every time having to get that call to like we need to get them admitted, or they need that, they need the other. I actually do have a client whose budget we were doing, and I mean that could easily go between anything between 40 to even 50,000 for a sick parent already, like a parent who already has a pre-existing condition. So I want us to go into the medical protection aspect of it, because I would like for these guys who are watching us, especially the Kenyans in the diaspora, to understand what the landscape is right now in Kenya. I think for me who's here, I can easily walk into insurance X or Y, maybe even ask for a quotation, get to understand. So what are the options for them? Especially, I'm very keen on aging parents, because that's what most of our Kenyans in the diaspora are sending money for. It's very ad hoc, very haphazard. There's no telling, you can't say when someone is sick, there's no control there. So what are the options? And specifically, I'd want us to talk from the perspective of budget. I'm a budget girl. So talk to us about are there budget options? Are there premium options? And as someone who's there, like we are talking the UK, the US, wherever it is that they are, how are they funding? So take me through the process of I am stuck in diaspora. I'm not coming back anytime soon, but I have family, a mom, a dad, someone back home that I need to ensure that they're protected medically.
That's a good question. When it comes to, let's say, for example, in this case, protecting parents, most of our clients in the diaspora, as you said, are taking care of parents, and some also have left their children on this side.
Exactly.
And when it comes to the different types of cover, the one which a lot of people have been taking up is the budget cover for their parents. So what a budget cover does, it takes care of still, yes, admissions, access to hospital. What medical cover does more than anything, which is most important, is access to medical care when you least expect it, right? And when it comes to, as I said, the budget covers, it gives you access to hospitals like Nairobi West Hospital, Avenue Hospital, Coptic Hospital. Yes, it will not give you access to the Nairobi Hospital or maybe the Aga Khan Khan. But if you're looking at a point to start with, it's a good place to start from, right? And the other thing is...
question.
Yes.
So these are tier 2 hospitals.
Yeah, these are tier 2 hospitals.
Could you help them know which ones are tier 1?
Okay, I will share that in a bit, because I wanted to say why majority of people take the budget tier 2 hospitals is because majority of parents are not in Nairobi. So the hospitals that their parents can access on that side, majority of them are not tier 1 hospitals.
Okay.
Like now, say the Nairobi Hospital, the Aga Khan Hospital, or even MP Shah Hospital. So those ones now obviously are a bit more premium. And even the type of cover that you have to take is a premium cover to be able to have access to that hospital. And then also another thing is, what also makes this, hospitals premium per se is, the cost is higher to access the doctors and medical care in that hospital. So it only makes sense for you to have a premium cover to have access to those hospitals. So yes, first you can start with a budget cover, and then also if maybe you want specific hospitals for your parents, what you could come and tell us is, our parent has a doctor in Aga Khan, right?
Okay.
Then now we can advise you, okay, it won't make sense for you to get a budget cover. We are going to look for a premium cover where your parent's doctor actually takes this cover, so that it's not a waste of money. Because it's important that even as you are taking up cover, your parents' doctors are in the list. And you see, our parents are aging. As in, I think it's one of those things is quite hard to watch. We are growing older, but we're also seeing our parents aging. So you need to make sure that there's specialists who can take care of specific conditions, especially things to do with bones, their backs, as in the things that you hear parents complaining about. It's also very important to make sure that whichever cover that you're taking is now aligning to what are the conditions your parents are. So it's important to know, okay, what are your parents' pre-existing conditions, right? And then now we can be able to guide you based on experience and also the type of insurers that are out there. Another thing which is very important to note, when parents are elderly, insurers usually insist on having their parents do a checkup first. A medical first. You know, when you're younger, you're not as high risk to an insurer compared to when you're older. So what to expect is also now to be able to do medical cover. A medical checkup. Let me just give an explanation on how the process is. You come to us and you say, okay, I want medical cover for my parents. My parents are age, say, 65 and 70. We're like, okay, that's fine. We're going to share with you a form which you're going to fill in, because the form will be able to guide us on maybe what are the pre-existing conditions, what is also your budget. It's also important to put into consideration what it is that you have, and then now we can be able to guide you. Now, the moment that form is sent, we're going to come up with comparison quotes. We don't only quote one insurer. So we like to show you different insurers.
That's my favorite thing about Risk Africa. Honestly, the fact that I'm not being sold to. Do you understand? Like, I'm not being told you must basically go to company X. I don't think I've ever asked for a quotation for myself or for a client and like being told, go here. It's an array of options. So and different budgets, different sub-limits and stuff like that. So I'm actually able to see, okay, if I went with company X, I'd get this but miss out on this. Or I would get that here and maybe a lower limit here. So you see, even your decision making is very informed. I love that.
Yes, exactly. Because again, it's important to understand that we're coming from a place of we want to help the customer. We're not here to sell, because products, you can get a product anyway. You can even go online to the website of this particular insurer and get it directly. But how are we going to actually structure a protection plan for you? Buying insurance is very different from actually creating structure based on your exact needs.
That's true.
Right? And then now, after that, now we're going to, as I said, to share the quotes of the different insurers based on what it is that you have filled in. And then also after that, now you can have a conversation with one of our lifestyle protection specialists to now take you through it, because we want, before you even take up anything, you fully understand what you're getting yourself into. And you can do this virtually. So if you are, away, you do not have to send someone to come to our office. We can just have a conversation online, and then you can ask us many questions. We love questions. A lot of our clients are people who ask a lot of questions. Then whatever it is that you decide on, let's say your budget is good, the cover you want to take up, you're comfortable with it. Now we help you with the application. when you send us now the information that is required during application, we'll need the KRA PIN and IDs of your parents. Yeah. And then also we can help with pre-filling the form, so that now we also take that away from you. What we're going to do is just share with you the filled in application form. You go through it and then sign. Then we send it to the insurer, and the process continues, takes maybe sometimes 7 working days, and then they can be on cover. But if there is a test that is required, your parent, maybe you might have to get someone, maybe if it's a sibling who's on this side, to take your parents. So then the challenge has been taking parents to do wellness checkups.
Can we not even go there? I think I did have a conversation with you about this last year.
No.
The number of people that are telling me that that's a challenge. Like I had a client tell me that her parents specifically refused to go for the medical checkup because they believe that unaenda kutafuta Kenya unaenda kutafuta utapata, you know. And guys, let us know in the comment section honestly if this is an experience you've had, and if we have medical specialists who are also watching us, please tusaidieni tafadhali. Like I've had, I almost get angry. Like I do understand that there's a very big difference in terms of like how our generation thinks and the previous generations, but like I get red. I just say red when I hear someone say that. I'm just like, I've lost 2 very close relatives of mine to cancer, and by the time we were finding out, it's end stage. So I'm in my mind, I'm thinking we've had years to figure this thing out. It is I will take Panadol here. And then, so even when I was having a conversation with one of them just right before it got so bad that we had to be hospitalized, like she just kept telling me, you know, I've always had this pain here for almost like 5 years. Sometimes, so she was speaking in Kikuyu and telling me sometimes it's I can feel like imevimba, sometimes it goes away, sometimes I can even go three months without pain, then the pain comes back. So I would ask her, so what did you used to do? And she's like, I just take pain meds.
Oh my God.
And I'm like, do you know by the time we are going to hospital, you know, the biopsy is that you can imagine the confusion because it's such a short period of time to get all these new discoveries. And I realized that, as you said, it's definitely a thing. Like most people will not get their annual medicals done. And it is from a place of fear that the doctors will find, as in, you're better off not knowing.
We get a lot of people
who
are at that.
How do we deal with this?
I think what we need to do is actually, even for us at this age, to now start building that culture of now starting to put your affairs in order.
You know I do it. Yeah, you're my provider. I always call you and I'm like, madam, I'm going for my annuals. Tell them to generate the letter. I go with it because for me that is non-negotiable.
And I keep on telling people, it's rather knowing these things early, because quite a number of our clients, things were picked so early and they were able to deal with it so early, and now they're fine. That mindset of, I would rather just not know, or you'll get whatever it is that you're looking for. Please let it stop with our parents.
Okay.
Tafadhalini.
Yeah, and even our parents. Mujaribu. Please, if you've never gone for an annual medical checkup, like just a wellness checkup, please make that a 2026 goal. It's of utmost importance.
Exactly. Yeah. So that is what usually, I mean,
that's where the challenge is.
But that's why I say, if you are in the diaspora, just have someone who is here who can take the parents to hospital. And then what we do is to try to make the experience as smooth as possible, to have the hospital expect this parent, and then now we do the follow-up to just make sure everything is good to go in the back end. And then everything is just, I mean, how it is that you have a conversation with them, take them there, show them that you just care.
All right.
Yeah.
Before we move from the medical, because there's so much we can talk about, there are 2 elephants in the room. The first one is, what if my parent already has a pre-existing condition? Will they still get medical insurance? And the second thing is there an age limit for when anyone can get health insurance?
Okay, that's okay. I like that question.
Yeah.
So when it comes to pre-existing conditions, that's a very hot topic with insurers, because that means you're already coming in with an illness. It's not a surprise to the insurer. And the there's two ways this thing can go if someone has a pre-existing condition. Number one, the premium can go up. There's what we call premium loading, because the insurer has to be able to cater for that extra cost that you're already coming in with. So they'll be like, okay, yes, according to, let's say, this quotation, we gave you maybe 50,000, but because you have a pre-existing condition and we know chances are high you're going to claim, we're going to bump it up by this amount, right? So the chances are high that there's going to be
a higher premium,
right?
Okay.
And then there's also an option that insurers do take, but it's not that common. Sometimes they can actually decline.
Oh,
yeah.
Okay.
So you see what insurers do, they also want to see that you have been taking care of yourself. They might ask for more evidence. What have you been doing so far up to this point? And then if they feel like you're too high a risk, there's a chance they can refuse, but it's very rare.
Yeah.
Most of the times it's just that
the premium will go up.
The premium will go up. So what I can advise, the earlier you get these products for your parents, the better. When you see your parent is about to retire, I mean, hit up to 59.
That's the time.
That's the time. Don't wait till they're hitting their 60s, 70s, because remember, they're accumulating more and more of these illnesses. With an insurer, that point of entry is what is most important, because when they enter, when they're still healthy, I mean, they can still be able to maintain them when when they get the illnesses maybe later. But now you're coming in already with an illness, it's a bit harder. It doesn't mean that completely impossible, but it is harder. And then age of entry has increased. Before it used to be like around 65, 70, but now we're seeing even parents at 80 can be accepted with the medical cover.
So if my dad is like 78 or my mom is 79, we still have a chance.
We still have a chance.
Above 80?
Options are limited, but we can be able to find something.
Okay.
Kikiumana, we can tell you, okay, because sometimes the premiums can come so high it doesn't even make sense.
Yeah.
We might even advise you to just now start creating a fund specifically for medical care. Because one thing we also have to know is that even with pre-existing conditions, the insurer will only reach a certain limit. What happens if the needs exceed that limit? So what we advise our clients, because sometimes outpatient is too expensive, you can actually start creating a fund on the side, a medical fund. It's like an emergency fund, but for medical expenses. You start building that fund. So in case of something that is urgent and the insurance has been depleted, you can go and dip in your fingers into that medical fund. So most people create it together with siblings. Or if you're alone, Polesana, there's some people who have to create it by themselves.
Yeah. All right.
That is our plan. And then also, as I'd mentioned, same thing. If you have children, you can get a standalone cover for children.
Okay.
You can get
so the insurance is in their name?
Yes, exactly. So you are the one who is now taking it up for them, but it's just them who's taking the cover, because maybe in the diaspora where it is that you're working, your
already
employer has, but they're not willing to cover, or even if they cover, the hospitals here cannot cater. The jurisdiction problems. So what you could do is you can get a standalone cover for your kids down the side.
And for young babies, it is so cheap.
Yeah, it's
so cheap. It's so affordable. I love that you mentioned the point of entry to insurance, because I would like us to transition to life insurance. Because I remember, like, when you structured my life insurance for me, I was not a mom. I am now, but I wasn't. And I think we had this back and forth, because, like, I think you've really, really helped me in terms of growing I was very green in that area. And the more I do life, oh dear God, and the more I see things happening, and the more I see 32-year-olds dying.
It's not a joke.
I'm like, can we talk about it? Because for me, when my client asks me, Susan, I'm on a budget, you've seen my numbers, you know I have very little wiggle room. Yani already umeshanichapa kiboko ukaniambia emergency fund. I've not even taken a break. It's now sinking funds. Before I've funded those two, now you're telling me I'll retire poor. Then there's all these special funds. Then my parent needs medical insurance. Then now you're coming to tell me that life insurance is non-negotiable. So for me, when my client asks me if I'm on a tight budget, how do I know if I still need life insurance? And for me, my answer has always been, if you know that if you dropped dead today, someone would suffer. Whether that is your dependents who would be your own children, your own spouse, or family, of course, again, in the spirit of black tax. I mean, I love that you call us the sandwich generation. I'm here, I'm taking care of the generation before me, and I'm trying to also sort out my own children. So you're here. So this person dies.
It's a wrap.
The world has stopped for these people.
It is a wrap.
Exactly.
Now you can imagine, now you're leaving your parents who will potentially take care of your kids.
With what?
With no money.
Exactly.
And both of them were dependent on your money.
So for me, that's what I always tell my clients. Like, if you know that kind of a scenario would, like today, wewe ndio tegemeo, you definitely need life insurance. So please take us very quickly, especially discussing the point of entry, because as I've mentioned, when I got mine, I wasn't a mother yet, but I already did have people depending on me back home. For me, that was a reason, but I also knew I had a desire to become a mother one day. So can you talk to us about this age thing? Because now, when I try to get quotations, because I entered at what, 28?
Yeah, 28.
Or 29, somewhere thereabout, yeah. Now when I'm seeing quotations for 35-year-olds, I'm just like, what's happening here, guys?
You are going to be punished for your age.
Yeah. So let's talk about the point of entry into life insurance, and then take us through why that's a very powerful protection tool in your protection portfolio.
And I keep on saying life insurance is a non-negotiable, especially as long as you have an income, right? And as you have mentioned, the thing is that with life, things keep on changing.
Yeah.
Before, I was also not a mother. I was single, and then eventually
living your best life.
Living my best life. And then now I get married.
Yeah.
And I have children, and then now not married anymore. Husband dies.
Yeah.
And then who knows what the future holds. So are you seeing that things can change? Transitions. So you have to have that one solution that is going to stand no matter what these transitions are. And when it comes to life cover, as I said, as long as you remember that you have an income, and that income is, there's a group of people who are dependent on that income. Even yourself. Right? Because first of all, yes, we're looking at it from a life or death perspective that, okay, right now you are providing for your kids, you're providing for your spouse, you're providing for your parents. The moment everything shuts down today, if you know tomorrow your children cannot go to school, if you know tomorrow your parents don't even know what they're going to eat, you need to make sure that you have this in lock. Because how I look at it is like, a continuation of your income, right? Okay, yes, I have stopped here, but my income still continues, and these people's lives are not going to be interrupted. Because think about it, the moment you're not there and you are the provider of the income, your children's schools will have to change.
Yep.
Your parents will now have to go and beg. Yeah, and ulikuwa kule maju, doing so well. And then things have just crashed just like that, just because there was no plan, right? So it doesn't matter what age you are. Actually, the earlier you get it, the better. Because yes, it does protect in the case of loss due to a death, but also critical illness. Even if you are going to be single the whole of your life, because there are people who have chosen that route, which is okay, you still can get a critical illness. Siku anasema, because you have a child, is when you can get a critical illness. You can get a critical illness even without a child. And another thing is, Susan, one thing I'm observing is some people are changing their minds later. They're choosing to have kids even if it's adopting at 50.
Yeah.
How do you know how, the decisions you're making now could be different from the time you are in your 50s in the next 20, 30 years. And it's also okay to change your mind. It's okay to change your mind from, okay, at this point in time, I don't want to have kids. And then now you're like, okay, I'm about maybe to retire. I want to bring in a child who I can take care of and also can keep me company. So you have to know that things could also change. And then also, whether, you don't have kids or not, at least this is a gift from you to somebody else. You can even gift a charity. What we're looking at it, even right now when you're single, is protection in the case of a critical illness or a disability. And if you have people who depend on you, at least continuity in their lifestyles. And not only lifestyle, but also now the very important things like food, clothes, and shelter, which could stop immediately. Because even if you have bank accounts in the diaspora, now imagine them trying to come and follow up with your employer. Do they even know? Yeah, that's a whole different conversation.
Yeah, that's the thing that worries me. Yeah. That's the thing that worries me about our Africans in the diaspora, because and now that you mentioned that, I think I would want for you to also take us, because one of the questions and worries I get is that I am in Germany, I am in Finland. Will a Kenyan life insurance cover? So talk about at what point is the payment triggered, what triggers a payment, and how does that work? Because most people living and working in the diaspora plan to do so until maybe after retirement. So what does that look like in terms of jurisdiction? Like, I am over there, but my cover is a Kenyan life insurance cover. So maybe take us through what triggers a payment. Yeah.
So as long as you're Kenyan, you can hold a Kenyan life cover. It doesn't matter where it is that you are in the world.
Okay.
Whether you are to die or to get a critical illness or an accident, wherever it is, you can still get paid because it is attached to you as a Kenyan.
As a citizen.
As a citizen.
Yeah.
Now, the issue comes in if you, let's say you are outside the country, say in the UK, and you get a life cover that side. Sometimes when you come this side, it doesn't work.
It doesn't cover.
It doesn't cover you, because we have a lot of clients who are coming maybe from the US or UK, are coming back here and their insurers like, we cannot continue. So it's important, first of all, even on that side, when you're taking your covers on that side, to understand, okay, if I'm planning to come back home, will it still cover when I am outside of this country? So yes, how you can be able to take it, as long as you're Kenyan, you can be able to get life cover. Actually, a lot of our Kenyan clients do have a cover on that side, and then they also have a cover on this side because they're planning to come back. And also remember, they're taking it not only for protection purposes, but also for inheritance purposes. And as I'd mentioned, the triggers are just the death, the critical illness, and disability. Yes, and the one which, as I mentioned, the one which has been very popular, the whole life covers, you only pay for a specific period of time and you're covered for the rest of your life.
10 to 15 years.
Can be 10 years, 15 years, some 20s. I always say don't go beyond retirement when you're paying for these covers. Let's pay for them when you are actively working. And now after that, you know you're good to go. And even if now you're to come and fall sick later and you fall sick and you get a critical illness when you're back home in your 50s, the insurance will pay. So it's so important to just make sure that you have some level of plan. And the rule of thumb is usually 10 times your annual income. But you can always start with whatever it is that you have. Like even for me, I started small, and when my income was increasing, I kept on now adding the covers, because I mean, I want to leave my kids and my trust fund babies, and then also just to ensure that they're protected no matter what.
I love that. Can we talk about briefly though, the what should you be looking for? Because you know what your friends are doing in the market. When someone reaches out, but you guys just go to Le Risk Africa kindly. You'll be sold things that you are not looking for. So what should someone be looking for in a whole life insurance? What are the very key things to be on the lookout for when you're choosing one?
So when you're choosing a cover, first of all, please pick a reputable company, right? Because this is something that is going to pay your family at some point in time. What if you live till 90? You want to make sure that at 90, this company is still in existence, right? Another very important thing to look at is the claim settlement ratio. How often do claims get paid by this insurer? Very important that a lot of people are not looking at is exclusions. We're having clients who are pilots, and the covers that they have, even some whole life covers, exclude death by being a pilot. Some people don't even check, because people have really commoditized buying life insurance instead of actually creating one that is for your life, that makes sense for you. And then also it's important that whoever it is that maybe is offering you this solution is someone who is knowledgeable, because what is happening is the products are there, but anybody can sell you anything. Because sometimes what I see is people are selling maybe very high, the sum assured is very high, but the critical illness is like 1 million shillings or 2 million shillings. And my question is, if you're to get a critical illness, how far will 2 million shillings take you, right? And you have, say, a 50 million shilling cover. So those are the things to look out for. Just see how someone is asking you the questions, and then also make sure that you read the policy terms and conditions. You can ask for the terms and condition policy document even before you take up the cover. Another thing that is extremely critical is to know that you have 30-day window period, even after you've taken the cover, to just go through it and just make sure that this is something it is that I want. Because sometimes some people can missell you. You might want a whole life cover and someone sells you the hybrid covers like the endowment or education policy. So you have to be very careful. Please go through that policy document like your life depends on it, because it does. Right?
Yeah.
You know that in the case life was to happen to you, that is life and death also for your people, right? So you make sure, the way you go through your employment contract, you look, with a fine tooth comb, even look for your lawyer friend. Same thing with life cover. Make sure that you're also very, very...
You understand what the terms and conditions are. All right, great. Can we discuss trust funds? They excite me a lot, especially in the context of a Kenyan or an African living in the diaspora. Why would this specific structure be very important, especially for the diasporans?
Especially for the diaspora clients, because remember, if you have left people on this side, you want to have structure on how they receive funds. You know your parents best, you know your siblings best, you know your children, right? Imagine them receiving a lump sum
of 40 million.
40 million.
Imeingia KCB.
Hivyo tu. Hata wanaweza kuruka na akili, right? Like, you've never seen this. Maybe you have been contributing 30,000-40,000 every single month. All of a sudden, there's 40 million in the account. I'm telling you, that is the time all investment advisors they just start coming up. All of a sudden, they know that they can start a matatu business. Guys, the things I have seen with parents, right?
You want our matatu people to come for you.
Do matatu business if you understand matatu. Like, imagine, in as much as I love business,
I can never do exactly.
I cannot do, right? And the thing is that, especially for people who in the diaspora, you want structure on how your funds are going to be distributed, because you're organized, you're working so hard. Yeah, some of you are taking 2 shifts. You're working 2 jobs.
Oh yeah, majority, not some. Most people work 1 or 2 jobs. Yeah.
Wow.
Yes.
Wow. Yeah. Now imagine you're working 2 jobs and then the money comes and then it's lost. Just like that. So the trust fund is to just ensure that structure. In the case of anything, the funds are going to be distributed according to your wishes. And to set up a trust fund account is the easiest way to get started, especially in your structuring journey.
Yeah, especially for legacy planning.
Especially for legacy planning. Because think about it, if you already have a money market fund account, and I'm sure Susan has already spoken about it, to set it up is very easy. You just fill in the application form and then maybe 2,000 to activate the account.
And that's it.
Right? Same thing with trust fund accounts. The trust is already in existence, right? All you need is just to occupy a small space in that trust, because you still want the benefits, right? So what you need to do is to open the account, which is filling in the application forms. What is required is your ID and KRA PIN. And then also the ID and KRA PIN of who you've chosen as guardians, and now the birth certificate or ID and KRA PIN of the beneficiaries. So it's birth certificate if they're under the age of 18. If it's over the age of 18, they need an ID or a passport, right? And then also, another question that usually comes up is, can I pick someone who's in the diaspora to be a guardian?
Yeah, I was heading there.
Yeah, you can, right?
Please, so like your friend who's not... do they need to be a Kenyan citizen?
No.
Okay.
No, we have families who are based in the US and then their guardians. I mean, they're also choosing guardians that side, but some of them, their kids are here.
What should the guardian provide? Like a guardian who is not a citizen of Kenya?
You need the equivalent of the KRA PIN.
So like their tax document and their passport.
Exactly.
All right.
Just for identification purposes, because when that time comes, the trustee, who is a professional trustee, is going to ask, are you the actual guardian? And for us to know this is the actual guardian, we need those documents, because remember, you already have shared with us the proof of the ID or passport or the KRA PIN or the equivalent in their country. So it is very important and critical to have those. And if now this is you who wants this, will be able to guide you and set you up based on the different countries that you are at. Yes.
I think one of the things I learned last year when you guys were helping me set up my my trust fund for tea was the difference between a typical trust fund and a money market fund. Because there are people who just ask me, why then can't I just open an MMF for my child? Because typically they'll give you almost the same interest rate. So while money market funds are giving you maybe 9 to 11%, your trust fund will give you 9 to 11. So after you did that explanation, you know what I did? I just took all the money that was in the money market fund, any money that was supposed to be for my son, and it was in an MMF, and just moved it to the trust fund. So maybe you can explain to us why did I do that?
So yes, a lot of people feel, because how it's been structured is kind of similar. The biggest difference between a money market and a trust fund is, number one, a trust fund, any money in a trust fund account does not go through the Kenyan courts. It does not go through probate.
Succession.
It doesn't go through succession.
Yeah.
Because think about it. For anybody out there, if you have a money market fund, as I'd said earlier, a special fund, bond, stock market, your people have no access. The moment you're like, you're gone.
Yeah.
They have no access.
Everything is frozen.
Exactly. But now for your children or anybody who depends on you, the moment you have money in a trust fund account, that does not go through the probate courts, does not go through the succession courts. That means that if today you're gone, tomorrow they have access to that money.
Yeah, because there was instructions.
Yeah,
I love how you refer to it as a financial clone of yourself. Yes. So we've put, my younger brother tends, ananiambianga tumeweka vikwazo hapo ndani.
Kwanza zako nakumbuka. Susan was so thorough.
Yeah, I'm not trying. You do know this, boys. Until you're in high school, you have X amount of money. Will you go to uni? Do you think that boy will go to uni? No.
In my opinion, people between 18 and 24 are still children.
That is why I put the 25 age limit. Because for me, it is for you to be able to access whatever funds will be left there after you've schooled. Yeah. They have to provide the graduation, like the certificate to the trust. Akipeana certificate at akiwa 22 ama 23, it's fine. You can get the money, because I also know the way we are cultured. It's very difficult for you to still, especially, and this is something I think for the wealthy parents who are putting systems and structures in place, I think there's room for that. You pass down wealth, but also pass down values. Because if there's not been put, like if there are no controls in place, sometimes even I, in all my wisdom and self-control, I think there's a level of money I can come into and it will confuse me. I mean, mi hata sidhani nimearrive, hata sahi kidogo kidogo bado inanishtua. Pesa kidogo. So imagine, so when you took me through that process, I don't think since then I've had such a calm and a peace, just knowing that, you know what, while you people are trying to get the lawyers to tell you what to do with my money market funds and whatnot, that one time after I die, my child can go to school. That one 6 months before succession courts have given us a hearing, my medical bill for my mom or my dad or whatever can be taken care of. Like the seamless transition is where you had me.
Exactly.
Yeah.
I love that, Susan, because even for me with my own children, the reason why I created that structure is to just, free my mental real estate. Because we already, as being a business owner, being a parent,
there's
so much that is happening, and I travel a lot because of work. I just want to know there's something that I have put in place that no matter what, there is continuation. I love how you say that continuity with or without me, right? There is that proper flow of funds. I need to know that my children are going to this school. There's a reason why I picked this school. Next month, they're not going to another school just because sikuwa nimejipanga. I cannot be working here so hard for the courts to make a decision for my kids.
That's true.
It's my money.
Yeah.
So I want to make a decision on my money when I'm here.
When you're alive.
And my kids, I always say that I feel that, God has brought me here to take care of them, especially at the time when they're extremely dependent on me. I keep on saying between the age of 0 to 25, they are my, they are my everything, right? Okay, yes, forever, but at least at that point, I need to make sure that everything has run as smoothly as possible. Because I feel that even after 25, 26, you have your job. Honestly, there's a way unaweza kujipanga. There's a way you can make things work. But I don't want interruption here, because we have seen a childhood. If a child's life keeps on getting interrupted, it will affect them in their 20s and 30s. They'll have so much trauma. There's so much that also maybe because someone cannot. We've seen children who cannot go to school for a whole year. And now it's takes them off guard, and now they have to extend their time in university. That's the time maybe they could already have started working. So when you think about setting up a trust fund, just think about it as creating that continuity structure to just make sure that there is no interruption in your people's lives.
Yeah. I had one client who also set up a trust fund, like a medical trust fund, specifically just for the parents. Like for her, because she didn't have children, like the trust fund she was putting aside is that in the case I'm not here, I would want my parents to be able to access this money for medical bills and livelihoods. I'm really keen on that. Is that a service that you'll be giving my people?
Yeah, we'll give your people.
You leave us a link or something.
So we're gonna drop it down here. And yes, medical trust as well, because most people create education trusts. Because remember, always start with the end in mind. I don't like it when people come and say, uko na kitu ya 5K. Let's just start with, okay, what is your goal? And then based on your budget, we can be able to see what it is that we can be able to do for you. So you can come to us. Maybe you don't want to create an education trust because you don't have kids or planning to have kids. But you can say, there's my parents who are dependent on me. I want to create a medical trust because I want to know that they can access money in whether I'm here or not for their medical care. So you create that pot of money, you can continue contributing, and then you can give instructions. This money can be used to continue buying medical cover, or it's an amount of money they can dip into when they need now to take care of their medical expenses. And remember, all the instructions will be there. So depending on your needs, because there are some people who are actually creating startup funds, trust funds for their kids, which is so cool. Especially business owners say that, I wish that someone has set this up for me. I will be so much further. Not every time we have to look. The family can be the investor.
Oh my God. I mean, right? Mbali.
Right?
Hata wangenipea tu 2 million tu.
Hata si nyingi. Exactly, because usually at that time, for a lot of people who do not have that runway, your business has to work. And most people, and you understand in business, some things fail, some things don't. So it's good to just have that level of cushion in case it doesn't work out. You can always start again. You have some money that you can continue bouncing on. But so just creating that structure, whether you are a parent or you want to take care of your parents, or there's some people, interestingly, who are setting up trust funds for themselves.
In case you get incapacitated.
In case you get incapacitated and there's nobody you trust to make a decision for you. So imagine you have a critical illness cover of 15 million shillings, and you want to know, in the case of incapacitation, you got a coma, or now you are unconscious, you can actually leave instructions through the trust fund account on how you want those funds to be dispersed. So you can actually be your own trust fund baby.
I love it. We are the babies. We are the baby girls. I really, really love that. Finally, you mentioned pension planning. This has been one of the hardest things to convince my clients to do for the Kenyans in the diaspora specifically. Because our retirement plan, one, if like I'm in Aussie, I have Super and Hester. If I work in the States or in the UK, there's all these pension plans that our employers have. Although I've noticed, like, you guys that are in the UAE, please let me know if you guys have, pension plans with your employers. That's why I'm seeing gaps, actually, for most of our UAE clients. They're not, most of them, it's like, umelipwa, sasa we jipange na iyo pesa. Like, organize yourself with those funds, right? Why it's been difficult to convince them is because, A, there's a lack of clarity around why they need it. B, I think Africans still think that having a shamba and a home by the time you're coming back to Kenya is the retirement plan. 3, there's the notion that I will come back home and start a business at 65 that will sustain my livelihood. Mimi nimeshindwa. Can you help me convince them that we need a personal pension funding at home, especially, and especially because of that, you could have, and this is what I've been trying to guide some of the people I'm working with, is that you may have a pension plan there, or a Roth IRA, or your supers and whatnot. and then you've come home. You know that transition process. Even in Kenya, just to move money from one pension fund into another. Like if I was to move it from CIC to whatever ICA, or from ICA to like another, it takes time, right? Now imagine I'm moving my money from Australia for the pension fund there to figure out
those millions.
Yes, how they'll be paying me here, and I'm already like, why would a Kenyan in the diaspora, especially one who knows that in the grand scheme of things, they would want to come and retire back home? Why is a personal pension fund based here important?
I feel like, Susan, you've already answered that question.
Yeah.
Just the whole continuity aspect.
Yeah.
First of all, if you already have a pension with your employer, that is a good thing. Just continue. And I know a lot of them also prefer maybe that side because also they're earning in dollars and the dollar is pretty strong, a pretty strong currency. But it's also equally as important, yes, to have one here, especially if you're looking into retiring here at some point because of that continuity. As Susan has said, the time that you are moving this side, you want to make sure that there's also some money that you can continue with on this side, even as you're waiting for this money to be transferred from your previous employer to your country in where it is that you are now. And secondly, if you do not have any pension at all, imagine you've been living a good life, whether it's in Dubai or in the US, UK, and then you're coming here. Hey, you will get a surprise of your life. You are earning, say, an equivalent of maybe 500,000, a million Kenya shillings. You know, one thing I keep on saying, death and retirement are equalizers.
I swear.
With retirement, you can earn 1 million, the next month you are zero because you did not set aside funds to take care of you at old age. And as we've mentioned right now, that people are growing older and older. So we want to just make sure, just as we had mentioned that what a protection portfolio does, and in this case, a pension, the continuity, lack of change in your lifestyle, even at old age. Do you know how depressing it is for a lot of older, parents who used to earn
very well,
and now they can't? You are dependent on those same children who you are sending school fees to. Do you know how hard that is? And then I keep on saying, with this our Gen Alpha, I don't even know if they're going to be giving us money. So
they're going no contact. Ukiongelesha mali vibaya, haya,
Imagine. So right now what we're saying is just, it's important to make sure that you also have something also back home to just ensure that continuity. So when the funds are coming from that side, there's already an existing pot on this side. Because you could also want to come back, number one, or if you do not have a plan at all, we want to know by the time you're coming back, there's money. At retirement, you know what you need? You don't need more shambas. You need liquidity, cash. Look at it right now. If you're taking care of your parents, what do they need the most? Money to go to hospital, money to pay their bills, electricity, water. What even with the shambas that they have, see, they're still asking you for money
for the shamba boy,
exactly,
and for the produce to have manure,
and the house manager. Well, at that time,
the most important thing 60s, is cash flow.
In your 60s, hey, you need cash, even if you're going to work, because there are people, as you said, who said at 65, I'm going to work. First of all, you don't even know how you're going to age. People are aging differently. Some are losing their memory. It's
Guys, she's not usually like this. Ninyi mmemkasirisha.
Because by the way, I'm getting a lot of this, not only from Kenyans on the diaspora, but also Kenyans. People are like, oh, even me, I'm currently investing. My investments are giving me. I'm like, that is fine. Just the way you have your investments and you have a life cover to protect that investment, you have your investment and you also have a pension to protect you.
Yeah, because investments do fluctuate.
Exactly.
However, a pension would give you like a solid annuity that would be coming in every month. So even when the stocks are not doing so well or business is not doing so well, then my pension fund is that, the baseline from where I can operate from.
Exactly.
Yeah.
And you see now, as I'd mentioned, people age differently. So you in your mind, you have seen those 8-year-olds in TikTok doing that dance, and you're saying, I am going to be that 8-year-old. You don't know. You cannot tell. So are you even exercising to make sure you're going to be that 80-year-old?
Dancing on TikTok. I love it.
So people lose memory. People sometimes even their bodies are not able to hold. So that's why even like, as you said, eating healthy and moving your body is so important because all that accumulates into your old age. So we want to make sure, maybe in as much as you might not be able to work. And again, even you see how things are changing so fast with AI. At that time, you're going to be taking new courses to go and do biashara. At that point, just maybe you can have your farm to do and keep you busy. And if you're going to have a business, it's mostly to keep you busy. That money should just be an extra amount.
Or you can just be like me. I want to be big girl. I do not recall a day in my life since I knew myself that I was just at a state of rest. Imagine. Yeah, so like at 80, I want to be work optional.
Yes.
Like I want to work because I want to, not work because I need to.
Exactly. You'll be playing with your grandkids, great-grandkids. I mean,
if I'm lucky to get some.
You know?
Yeah. Or just gallivanting with my husband.
Or you can travel around the world. I mean, I don't feel that now age should restrict you from doing some of these things. Because it's like sometimes people are like, no, I'm in this age, now I just need to chill here.
Sure.
So you can, everything is by design. Even your retirement should be by design. So always remember, your pension plan is that continuity plan to just make sure no matter what happens with your investments, no matter what, especially even for the people who, do not have any pension at all, you have money when you come back home. Even if you have your farm, yes, you'll have your home to stay in, but you have cash to actually pay for the utilities, bills, and also for your medical care and also travel.
Yeah.
Yes.
I like that. You know what I want us to do the next time you are here? I feel like there's a need. It's just that it's been over an hour.
Yes.
I need us to tie all this together in a lovely bow of setting up family trusts.
That one.
Because what I'm seeing, I'm now imagining this person X, Wanjiko or Karanja or Otieno and Nzambi. This person has worked so hard, and maybe they take all this advice you've given them and all the advice I'm giving in terms, so they have an amazing investment portfolio, they have an amazing protection portfolio, and we are just trying to keep the succession costs out, and we want to preserve, multiply, and make sure that our African story changes. We are not just passing down poverty from one generation to another, but we are passing down wealth and passing down assets. So I think when I have you guys, let me know in the comment section if you would want Mnyindo Tairo from Lerisk Africa to come and take us through how to now do that. It's referred to as the most ironclad way to make sure that proper distribution of all your assets and systems and structures gets to the third, the fourth, or even the fifth generation.
Susan, do you know one very sad thing? I was reading an article from the UK. It was saying that the unclaimed financial assets, even in the UK, is full of African assets.
Of course.
Yani, at home, we are not speaking money and we're not creating structures, because, as I said, when it comes to protection structure, it's also very important to legal structures.
Yeah.
Now, imagine you're also accumulating so much wealth there. You maybe even bought an apartment. Yeah. You've not even planned for that wealth. How can we be able to marry the wealth that you have built there and the one which you're also accumulating here? So I think it will be a very important conversation so that we really reduce this wealth leakage. We're creating so much wealth and we don't have sense and living it. Maybe even that wealth you've created there, maybe even your employers do not even know who are your people down here. And will they even bother themselves to come and start looking for your people in a different jurisdiction? So it is important. You have to take it upon yourself to be like, okay, I'm working so hard here. There's the assets that I've accumulated here, because even some of us are buying investments outside of the country. How do we now create that structure?
Marry all of that
together.
That's why I felt like that's very important.
That
I
is
think
very, very
you guys
important.
let me know if this is something you'd want. Najua sasa lazima nikatafute Mnyindo kutoka nini. You give her 3 months notice if you want her to come to the channel. But one of the things I'm going to be doing, guys, is that I'm going to leave several links in the description box, and I'm going to really tailor make this very, very uniquely for you guys. We will have a link for the people who need help with medical insurance in the description box. We will have a link for the people who need help with pension. I don't want to assume that you all have the same issues. Maybe in that entire journey you've noticed, oh, I have this one, but I don't have that one. So click the link on the description box so that you can also get to interact with the Lerisk Africa services. But then I know today we've done a lot of theory, Mnyindo, and we have something planned for our Kenyans in the diaspora in March. And because you guys keep saying, Susan, you didn't give us early notice, please take out your calendar. I've also taken out mine. On the 20th of March, 20th of March. That's
2026.
like 2026. All right. I have a free training for Kenyans and Africans who are in the diaspora. What we've done today is a little bit of talking, a little bit of theory, but you guys know I'm a numbers girl. I like numbers. I like to show people what we mean by pension funds. I like to show people what we mean by if X amount is going to your life insurance, what are you looking at in terms of, the sum assured, critical illness cover and all of that. So what we've done today is just giving you a taste of it, but we would like you guys to give us 2 hours. And Mnyindo Tairo has offered so graciously, together with her team, to be able to take us through. So very, very quickly, Marianne, please tell us what we'll be doing. So let me just first of all get the dates out. So this is going to be on 20th of March, 12 to 2 p.m. East African time. So please do your time conversions and please have that on your calendars. We are going to have a link in the description box down below to register for the webinar. We only have slots for 500 people. Once we hit the 500 people mark, you're going to be locked out. So if I were you, I would register for that webinar today in this description box down below. So very quickly, Mnyindo, please take us through what we'll be covering in our upcoming webinar as you give us your parting shot as well.
Awesome.
Yeah.
I'm really looking forward to the webinar. There's so much that we were not able to cover here, especially things like funeral cover, because also dying in the diaspora is a huge gap.
Yeah.
It is not cheap to, bring the body down this side. So those are the numbers we're going to look at. So during the webinar, we're going to look at the actual gaps as a person who is in the diaspora. What are you facing in terms of now your wealth protection portfolio, right? So we're going to look at what are the gaps, what are the risks that you're actually facing, both sides, both on that side and this side. And then we're going to bring actual numerical values to the table. Yeah, because as I mentioned, we have to put numbers for it to make sense. If it's now medical, if it's life cover, if it is pension, right? We're even going to show you, for example, how to consolidate your pension. Because some of you used to work in Kenya, you moved, you didn't even consolidate, you're just leaving your money somewhere. So we're going to show you step by step, very practically, how to go about it. Understanding your gaps, understanding your needs and your family dynamics, and then creating the solutions, showing you the actual numbers, and then eventually just guiding you in setting up. And what will be most important is the questions that you're going to bring to us. We're looking forward to it, and we can be able to now cover anything that you feel that was not addressed and now maybe answer based on your own particular situation, because this is something that we have seen is such a huge gap. A lot of you doing so much for our families back home, but you are left extremely exposed. So our job is to come and close that exposure. So Susan is helping you make a lot of money, right? Putting your affairs in order. But you need to make sure that that money that you're making is also equally protected, because anything you care about, you protect. So I will be looking forward to it. We're going to have this webinar together with Susan, and this is going to be exciting.
I can't wait. I really hope you guys enjoyed today's episode. Guys, I honestly have nothing else to add. Please make sure you check out the links in the description box. Please get the ball rolling. Get the ball rolling. Q1 is almost coming to an end. Let's make sure the systems and structures are put in place. And you guys know I don't lie up on here. She has structured everything around my protection portfolio, all the way down from my health insurance to my personal pension fund to our family trust fund. And it's been amazing. The more we do these things, the more I walk around very peaceful. And I would want that for every person that's watching us. So please make sure you click, see all the links we've put down below so that you can start your protection journey. I've been your host, Susan. I'll see you in the next one.